All right, here's my worst, most mismanaged trade of the day, and that is Tesla, TSLA. So here's a backdrop. Tesla all day had been very weak. In fact, in the morning, one of the pro traders, Dave, actually, I think, lost on Tesla, which is like, that never ever happens. So this thing has been tempting people all day long, but the setup is actually quite nice. There weren't too many short setups available. NLOK was another good one, but Tesla today was just constantly teasing and right on the edge of being a really high probability trade. But the market and the movement of Tesla itself kept keeping it on the edge and faking people out. So here's why it was pretty good. It was back under the 200 SMA, and it also had broken this uptrending line as well. So if you look at the HA candles, look at that. That's a nice little HA reversal, flat bottom. So you got flat bottom all the way up, and then you got all of a sudden this flat top, which could be kind of a violent reversal. You've also got a lot of relative volume, much more than the market, and a little bit more than its sector, and the relative strength is violent and sudden. So that's pretty cool on the D1. Obviously, it's not doing anything tremendously crazy on the D1, but it's got enough. Then on the intraday, you've just got a lot of really consistent weakness. So even though it's kind of chopping around a little bit, it's in this downward channel. You're not sure when it's going to pop to the top of the channel, but it is in the downward channel. And by the time I'm considering shorting it, it's kind of riding the top of the channel, which is a little bit suspicious as well. You can see the relative weakness of this thing consistently has been low. So this line here is just an average of the whole day, and it's consistently below the market. So even though this thing chops around a little bit on the relative weakness, consistently overall it's been pretty weak. These dark candles here indicate more flat-topped HA candles. So it's looking pretty nice. And 155 was my initial entry. So I went for it. And part of it was because psychologically I had been waiting all day. It was a day where you required a ton of patience. And to be honest, I'm not that patient of a trader yet. So my patience was tested, and I decided to enter right there. My thesis was that this thing was going to come back down to the bottom of the channel. So I entered short here, even though it didn't confirm this break as well. And on top of that, you've got a couple more lines happening here too that basically have to break ASAP. Otherwise, they're going to create a bounce. And because this thing's been riding the top of the channel, the chance of this thing reversing back up is kind of high. So this isn't the highest probability intraday entry that I could have picked. It was a little bit jumping the gun and ahead of the curve here as well. So these support lines right through here coincide with a 5-minute trend line coming all the way down through to there, and then also this high volume candle, this candle, and then there. Sometimes these lines that are broken can influence intraday patterns. Now, if you pick a strong trade, this type of support probably isn't going to do much, but it's definitely going to affect the movement. And because this was already kind of at the top of the channel and Tesla's a little bit of a volatile stock, this support line coming through that D1 could have played a role as well. So this is a double support. It's double minor support, but it's double support. So I'm hanging out here at 155. And this is what the market's doing as well. The reason why I chose it right there is because we had that thesis of this thing being a contracting range, and it had just rebounded off the top. But if you look up here at 10p, let me see where the 155 is. 155 candle, it had just kind of finished a bear cross. So this bear cross here is essentially explaining like a selling cycle coming all the way down through here, but it was just about to cross out. And if you start to enter in shorts when the move has already kind of chewed through some of its cycle, your runway is shorter. So this might continue all the way down through there like it did in the morning. That's a big long one. But you're better off going into a short like Harry did up here at this type of cross up top, where it's crossing all the way down to there and your thesis is short, versus just grabbing it somewhere down in there and then, crossing your fingers and hoping that you have enough runway left for this trade to develop into profits. So I'm in Tesla down through here. It's already started to bull cross a little bit, but I like the TA on SPY. So SPY is going down, 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 down. And Tesla's not necessarily following as well. The relative weakness is sketchy. So What I did was realize that my entry was too early. I needed to confirm below those 2 minor support lines. So I actually took a very minor loss because this thing could have just ripped back up to VWAP and I could have taken a bigger loss. And because I didn't like the D1 that much and the intraday pattern wasn't that weak, I wasn't going to hang around in this trade long enough for it to develop. And then this thing confirms all the way down. So I go, okay, cool. I'm going to re-enter the trade. I'm going to focus on being a good trader and just taking the opportunity. This is a slightly higher potential trade now. So I took Tesla short. I had a profit target. I took the profit target and I kind of just broke even on the whole thing. Now, hindsight's 2020. Here's what I should have done. What I should have done was entered up here, short, cool, but with a very small size. And then as each one of those support lines here broke, as each one got broken and confirmed broken, I could have slowly added to my trade until the market came all the way down to this bottom line here, and then this candle or this candle or this candle, somewhere around in this zone where I see it starting to curve back up towards the top. That's when I could have exited. And on Tesla, that was right down around in this area right through here. So the correct trade was short here, very small size, so that it can move around a lot if it gets stuck against me, because Tesla's volatile. It'll probably come back here eventually. And then add on this break, add on that break, and then maybe I'm at like a full entry size for a high potential trade around down here. I'm not at 1.5 size or double size. And then I could have rode that until the end of the market. But hindsight's 2020, and I'm glad I took a small loss when I actually wasn't trading correctly. And then I'm glad I re-entered and kind of broke even on this damn thing. So learning potential right there.